Hello and welcome back to the channel, where we break down complex market mechanics into actionable insights. Today, we're diving deep into a fascinating hard-to-borrow stock that's seen some explosive price action recently. We're talking about Universe Pharmaceuticals Inc., ticker symbol UPC. This is a unique situation that demands our attention, and we're going to dissect why it's appearing on our hard-to-borrow screener with some truly eye-watering statistics. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's get straight to it. Our focus today is Universe Pharmaceuticals Inc., a company operating in the healthcare sector, specifically within drug manufacturer, specialty, and generic. Through its subsidiaries, UPC is involved in the manufacturing, marketing, distribution, and sales of traditional Chinese medicine derivative products in China, often targeting common chronic health conditions in the elderly. This is a relatively small company with a market capitalization of just $4.02 million. Now let's look at what's been happening with UPC stock price. Short chart of UPC price action today alone. UPC has seen a phenomenal gain of plus 13.67%. Looking back, the momentum is even more striking. Over the last 5 trading days, UPC has climbed by an incredible plus 113.51%, and over the last 30 days, it's up by plus 134.7%. This significant upward trend has been accompanied by robust volume. Today's volume for UPC reached 4,677,200 shares, which is 1.6 times its 30-day average volume of 2,902,753 shares. Clearly, something is brewing with Universe Pharmaceuticals Inc. What is cost to borrow and why it matters? Before we get into the specifics of UPC, let's quickly explain what cost to borrow is and why it's such a critical metric for short squeeze potential. When someone wants to short sell a stock, they first have to borrow shares from a broker. They then sell those borrowed shares, hoping the price will drop so they can buy them back at a low price, return them to the lender, and profit from the difference. The cost to borrow, or CTB, is the annualized fee that short sellers pay to borrow those shares. Think of it like renting a car. If a car is in high demand and there are very few available, the rental fee skyrockets. Similarly, if a stock is highly sought after by short sellers, but few shares are available to lend, the cost to borrow can become extraordinarily high, often exceeding 100% annually. A high CTB indicates that it's expensive to maintain a short position, putting financial pressure on short sellers. Why this stock is hard to borrow right now. Now, let's connect this back to Universe Pharmaceuticals Inc. UPC has appeared on our hard to borrow screener for some compelling reasons. Highlight CTB. The annualized cost to borrow fee for UPC currently stands at an astounding 759.3%. That's right, over 700% annually. What's even more remarkable is the momentum behind this fee. It has surged by plus 756 percentage points over the last 5 trading days. This isn't just a high fee, it's a rapidly accelerating one. Adding to the scarcity, there are only about 3,000 shares currently available to borrow for UPC. To put that into perspective, the estimated float for Universe Pharmaceuticals Inc. is approximately 0.3 million shares. 3,000 shares is an incredibly tiny fraction of the float. This extreme scarcity, combined with a skyrocketing CTB, indicates immense demand from short sellers to establish or maintain positions, but very little supply. Our internal composite squeeze score, which factors in CTB level, momentum, borrow supply, float size, volume, price action, and technical setup, currently registers UPC at a 58.2 out of 100. This score suggests a notable potential, but remember, it's not a guarantee. Squeeze mechanics explained. So, what does all this mean in terms of a potential short squeeze for UPC? A short squeeze occurs when a stock's price rapidly increases, forcing short sellers to cover their positions by buying back the shares they borrowed. This forced buying creates even more upward price pressure, trapping more short sellers and a cascading effect. In UPC case, with a cost to borrow 759.3% and only 3,000 shares available, the pressure on existing short sellers is intense and escalating. If the price continues its recent upward trajectory, remember, plus 113.51% in 5 days, short sellers face mounting losses daily, compounded by those hefty borrow fees. At some point, many might be compelled to buy back shares to limit their losses or avoid margin calls. With such a limited supply of shares to borrow, it's also extremely difficult for new short sellers to enter the market, or for existing shorts to add to their positions. This combination can create a volatile environment where any sustained buying pressure could trigger a rapid run up, a short scramble to cover, fueling the price surge even further. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that Universe Pharmaceuticals Inc. will eventually fall, and they are willing to pay a premium to maintain their bearish bet. Dilution risk check. One critical factor that can negate even the strongest short squeeze setup is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can flood the market, set aside borrower demand, and often drive down the price per share, effectively undermining any upward momentum from a squeeze. We always check for this risk. Per Universe Pharmaceuticals Inc., our check revealed good news on this front. We found no recent dilutive SEC filings such as SMINUS1, SMINUS3, or 424B in the last 90 days. This means that for now, the company hasn't recently indicated plans to issue a significant number of new shares that could dampen a potential squeeze scenario. This is an important consideration when evaluating any hard-to-borrow stock. Once again, and this is important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, with all this in mind, what should you be watching if you're interested in Universe Pharmaceuticals Inc.? First, keep an eye on the cost to borrow. Any further increases in that 759.3% fee, or even just its sustained level, indicates continued pressure. Second, monitor the shares available to borrow. With only 3,000 shares currently, any further reduction would make it even tighter. Third, watch the volume. UPC has seen 1.6 times its average volume today, signifying increased interest. Does this sustained volume continue, or does it drop off? Finally, observe the price action. Can UPC maintain or build upon its recent impressive gains of plus 13.67% today, and over plus 113% in the last 5 days? Any significant pullbacks might alleviate pressure on shorts, while continued upward movement could exacerbate it. Look for news specific to Universe Pharmaceuticals Inc. that might influence market sentiment. Universe Pharmaceuticals Inc. UPC presents a truly fascinating case study in the world of hard-to-borrow stocks, with its incredibly high and rapidly rising cost to borrow, coupled with an extremely limited supply of shares. While the signs of short squeeze potential are intriguing, it's vital to remember that the market is unpredictable and high CTB doesn't guarantee a squeeze. Always conduct your own thorough due diligence. This is a dynamic situation in a very small cap company, and understanding the underlying mechanics is key. If you found this breakdown helpful, please like this video, subscribe to our channel for more deep dives into unique market situations, and let us know in the comments what hard-to-borrow stocks you're watching.